Welcome to Friday Takeaway. This week we go tech with Unisem and Frontken, but before all that, France's President Emmanuel Macron paid a visit to Trump in the US in what some pundits have described as a very weird trip. There was hand-holding, long handshakes, and Trump repeatedly touching Macron. Yet despite the theatrics, Macron had the unenviable task of attempting to talk Trump out of bailing on the Iran deal, the failure of which means the rise of Iran's nuclear program once more. Did he succeed? It's hard to say in an administration this chaotic. In his first foreign press interview in more than 3 years, caretaker PM Najib says he is expecting a better result in the upcoming polls, coming out of a few, let's say, turbulent years tainted by the 1MDB scandal. In the offing, more business and income tax cuts if his party holds on to power. Finally, Public Bank held its AGM and its scion Tan Sri Hong Piao held court, and by all accounts, the bank's shareholders celebrated him with songs and begged him to stay. But what he did not do was name his successor, which is a concern, considering that he is due to step down next year. The KLCI was feeling a little better compared to yesterday at 1,858.09 points, but lower compared to last week's dizzying heights of 1,895 points. In general, Asian stocks started Friday morning a little better as the Dow did better on solid earnings. But worries over yields may continue to dampen moods, and the ringgit is faltering slightly. In this week's This or That, we will take a look at those in the semicon space. It isn't an easy sector by any means given its cyclical nature, so it's a case of always trying to find a bottom. Hence, this week we look at a more pure player Unisem, which had a bad set of results, and Frontken, which had a very good set of results. So why the differing fates? Is it because they sit differently on different parts of the chain that matters? Let us take a look. Unisem is a semiconductor assembly and turnkey solutions provider. It has factory locations in Ipoh, Chengdu and Indonesia. Chairman and Group MD is John Chia Sintet. Unisem had a bad set of numbers for its first quarter, with net profit dropping 87% due in large part to Forex because of the weaker greenback versus the ringgit. There was also an issue of lower profit margins as the company adjusted their product mix. But another thing to note is that Unisem's share price was actually affected by Bursa Malaysia's newly introduced intraday short selling or IDSS measures. It actually plunged 18%, its biggest drop that it's seen since IPO. This drop actually caused Bursa to suspend its proprietary day traders and IDSS activities on Wednesday. Unisem, while it owns its weak start, says that it expects actually a better year and a satisfactory performance. One thing to note that is, if most of the bad numbers came from Forex, a stronger USD would mean a swing in the other way. CIMB says that other potential re-rating catalysts for the stock, higher dividends. So, this morning the share price was no better, trading at a historical low of 1 ringgit 81 cent. But if the worry is over the short selling, the thing to actually keep in mind is that short selling here is regulated. Analysts are still broadly buy though on the stock. The highest target price is 2 ringgit 75 and the lowest is 1 ringgit 55. Established in 1996, Frontken provides support services to the semiconductor industry, surface treatment and mechanical engineering solutions, which serves a very wide range of industries including semicon, oil and gas, power and others. In contrast to Unisem, Frontken's first quarter was fairly solid, earnings improving by just over 25%. This was because its semicon support business, which it conducts through its Taiwan-based Aries Green Tech, saw positive growth during the quarter. Aries Green has been growing significantly for the company because it cleans wafer fab equipment, and Taiwan is still the largest integrated circuit global fab producer. Barriers to entry to this biz are actually very high because certification is a must. Yet, in its notes, Frontken does say that it does expect the business conditions to remain challenging, but cautiously optimistic. It needs to continue to focus, though, its attention on quality and efficiencies of its business so that it remains competitive. Nobody covers this stock, but the historical range is 51.5 cent at the higher end, 23.7 cent on the lower end, and somewhere in the middle is 38.7 cent. This morning, the share price didn't seem that impacted by the better numbers and was trading at 41 cent, but that's not very much off from where it was a month ago.